Well, howdy there, folks. Welcome into today's video. Got a few things to speak about in this one here today. First off, we're going to get into my $150,000 decision. And I want to run you through the numbers and kind of my thought process in regards to this. I don't share a lot about things that I might be doing personal finance-wise. I usually just stick to stocks, but I thought you guys might enjoy kind of hearing my thought process around this. And, you know, it might be something that helps you guys whenever you're thinking about doing an expense out there. So we'll speak about that at the beginning of this video. Then we're going to talk about Wynn Resorts and what's going on there. Then we're going to speak about PayPal. Then we'll get into Palantir. We're going to get into SoFi, and we're going to get into Fubo, all in this video here today. Now, I don't know if you guys watched the big game last night, but where the heck did Temu get all that money? I counted 5 ads either during the game or right after the game ended. And the ads during the game, from my understanding, were $7 million each. And I believe I counted 3 ads that were during the game, right? So that's at least $21 million worth of ads they ran just during the game. And then I believe it was 2 ads after the game, which usually they can get, you know, a couple $1 million for those ads that happen right after the game as well. So they had a ridiculous budget. I'm like, where the heck did they get all that money? That's all I want to know. Was I the only person that noticed that? Like that Temu, they were running more ads than anybody. I'm like, that was insane, okay? And then did you guys see it? Elf Beauty, Elf Cosmetics, they had an ad as well. So if you saw that one, let me know in the comment section. If you noticed either those Temu ads or if you got to see the Elf ad, let me know in that comment section, okay? Alrighty, guys, let's get into this. Appreciate you joining me as always. All I ask in return, smash a like and make sure to subscribe to the channel. New all-time high subscribers in the history of this channel. So yeah, I appreciate y'all being here as always. If you're looking to join my group of super investors, that will be the pinned comment down there to join my private stock group. Apply to join us in there. Get access to all my course curriculums plus the Discord chat and all that good stuff. Okay. Alright, guys. So let's get started here talking about my $150,000 expense. So at my Arizona house, I built a pool and I really enjoyed that pool. But that house, we were hardly getting to use it now at this point in time. You know, I have 3 kids, getting busier. I want to take trips to other places than just Arizona all the time. And so I ended up renting that house, right? But I miss the pool. I really do, especially in summertime, right? And so here at my Vegas house, I don't have a pool. So I was thinking, you know, maybe I'll go ahead and build a pool, right? And I thought, let me do something a little bigger than what we had in Arizona, a little nicer, a little more upscale than that particular pool, right? And I thought, okay, you know, maybe spend like $80,000 to maybe $100,000 on this. And the way I kind of thought about this is I think, you know, if I sold the house someday, I think I could get an extra $100,000 for having a pool versus not having a pool, right? So that was kind of my thought process going in. Well, the quote ended up coming back at around $150,000 for the pool. And so the way I kind of thought about this is right now you can get 5% or so in treasuries. So that money locked up, you know, for a year or whatever, gets me 5%. That's $7,500 a year just in interest, right? Which is a pretty substantial number. $7,500 a year. If I can get 10%, let's say in the SP 500, the stock market, right, which the SP 500 has been averaging 10% for quite a while now at this point in time, that's $15,000 a year, right? I mean, imagine you can go on a lot of vacations for $15,000 a year. And so plus, you know, $150 a month for a pool man, chemicals, all those sorts of things, right? That's another, you know, $1,800 a year. Things go wrong with the pool, so that's an expense as well. Then I took this to another step and I said, okay, the public account, this is calculated by Fidelity Investments. The public account has gotten 25.7% compounded annual growth rate, 5-year return calculated by Fidelity Investments, right? So let's run some numbers on this one. This is going to shock you, okay? $150,000 in, let's say, 5 years tucked away, and I get the same return over the next 5 years I got over the last 5 years, right? I would end up with $470,000 in 5 years from now, right? Which is, once again, not a small amount of money. That's a very large amount of money. So I'm looking at it, I'm like, I'm having trouble justifying it at that particular price point, $150,000. Now, I don't know, maybe I got, you know, a bad quote. I don't know, maybe they saw I had money. I have no clue, okay? All I know is that was ridiculous. It's not even like I'm doing some huge pool. You can't even do huge pools in Vegas nowadays. They don't allow you to, right? The other thought process kind of is, I'm thinking this particular house I live in, maybe live in this one for like another 3 to 5 years. And then I would like to rent this house because the area it's in is like, like this area will always be highly desirable for 10, 20, 30 years to go in the future, this particular part here. And so I would love to keep this property long-term and rent it. And I will say it is easier to rent without a pool. You don't have to worry about who comes up with the, because let's say I got to pay the fee for the pool man, right? $150 plus a month. Well, that's another expense to tack on to the property on top of all the other expenses. Then you have to worry about having your doors be set up in a way where the door automatically closes, which is an expense. Sometimes you have to gate it off. Some people are turned off by a pool actually because they might have little kids and it's a worry for them. So I'm like, I can't logically make sense. So at the end of the day, I'm like, I thought about this heavily the past, I would say 2 to 3 weeks, and I'm deciding to not go with it and, rather take that money and put it other places, right? And so, at the end of the day, 3-5 years from now, maybe something in the Summit, that might look good. Maybe something in Askaya, that might look good. But that's a while, okay? We'll wait on that. So that's my thought process there. And sometimes you got to do that, man. Sometimes you got to make some sacrifices of like, oh, man, this would be fun. This would be so cool. And say, you know what? I think that money would be much better used other places and, could get a much better return on investment than something like that at the end of the day really is more of a liability than anything. So it's not the first time I made a, decision like that. It won't be the last. Let's just call it that, okay? Alrighty, so let's talk about Wynn Resorts at the top. Then we'll get into PayPal, Palantir, SoFi, and Fubo, okay? So, I don't know if you guys have seen the pictures coming out. Yeah, Wynn Resorts, baby. Once again, Chiefs all partying there. Patrick Mahomes, Travis Kelce, Taylor Swift, the whole gang, man. XS Nightclub at Wynn Las Vegas. Oh, yeah, man. It's all over the internet, all over social media. Great to see them. The party was late into the night. These photos they posted at 7:08 a.m. Oh my gosh. I don't know how late that party went, but that party went late. So just great branding for the Wynn overall. I was at the Wynn on Saturday night. Went to the Wynn Saturday night. First off, the tables were, if you want to do blackjack, it was $500 minimum from what I saw on the Wynn and the Encore site. $500 minimum bet, blackjack. Roulette was $100 minimum, I saw. And then, let's think, Baccarat, $500 minimum. This isn't even the high limit rooms. This is just out on the floor. The high limit rooms went into the Encore side, $2,000 minimum in the high limit rooms. The high limit slots area, I've never seen it that busy in my entire life. And I've been to the Wynn and Encore probably 20, 30 times. Never seen it that busy. And celebrities everywhere. It was the who's in that place. Travis Scott walked right by me. I didn't even realize that. My friend said, dude, Travis Scott goes right there. I'm like looking. Everybody had their phones out and everything. I totally missed it like a dork, but I'm not the best at looking for people and things like that. But yeah, just absolutely crazy. That's a random picture. I don't know why that's in there. Justin Bieber was seen at the Wynn as well, partying it up. Good for him. And this goes back to F1, Leonardo DiCaprio and Tobey Maguire, Sophie Vergara. They were all, partying at the Wynn, having a good time and all those sorts of things, right? This is from Leonardo DiCaprio at the Wynn. And so just all that stuff, man. That's the sort of branding. You could never run commercials that could get you the equivalent of that. The fact that, these are people's heroes. These are like the coolest people in the world, right? These are the people that everybody looks up to, the freaking Leonardo DiCaprios, the Justin Biebers, and, all these folks, the Taylor Swifts and the Patrick Mahomes, and the fact that they stay at the Wynn, they party there, man. The amount of branding, dollar amount, you could never put a number on that. It's ridiculously valuable, right? So there's levels to it. And I saw some other celebrities at some other properties. Travis Scott, he shouldn't even have been at the Wynn. Travis Scott, his show was at MGM. I think it was at Hakkasan, from what I remember. He shouldn't even have been there. And I guarantee you, they gave him probably the nicest suite there, and yet he's still over at the Wynn. It shows you where people actually want to be that have big money, right? And by the way, those weren't even close to being the most successful people at the Wynn that night. I was telling my friend, I said, I bet you there's probably 15 to 20 billionaires staying here tonight. Like there's levels to this. But those people, a lot of people don't know who those are, right? Only the people know the celebrities. PayPal. So, PayPal. I have some good news, really good news. The good news with PayPal is this one is starting to kick into gear. It's up 7.7% in just the past 2 trading days now at this point in time, right? we had that big flush right after earnings, and it's clear as day every dip in the stock is getting bought up right now, right? And you got to ask yourself, who's buying? Who's buying? Is it the company buying now? The share buyback, is that starting to roll? Is it Altimeter Capital, Brad Gerstner? Is he starting to load up on shares? Who's buying? I can tell you, to get that move just in the last couple of days is a pretty strong move. It's a lot of buying pressure to put out there, right? Now, we did flush out a lot of the weak hands after that earnings. Weak hands is just kind of seen of it's people that don't have a lot of conviction, either strategies or in a particular stock, right? And let's be honest, there was a lot of people that bought PayPal going in those earnings thinking it was just going to go up. Didn't really want to be around long term. And so we had to flush those weak hands out. And we did that the day after earnings, right? We flushed out those weak hands, and that was what it was, right? A shakeout refers to a sudden and sharp decrease in the stock price, the price of a stock or market, followed by an equally quick recovery. This is pretty much exactly what we're seeing in PayPal now at this point in time, right? That quick flush and then straight back up. So, and it's not even like the market's been that amazing. I mean, technically, the NASDAQ should be down today. So it's not like it's really being helped by the market. It's just it's running its own race, right? And so the interesting thing with PayPal now at this point in time, right, is I think we've had a lot of mega longs loading up on this stock, like myself, for instance, right? And I don't think a lot of these folks like myself are going to sell. As the stock starts to go up and it reaches 70, 80, 90, 100, 110, 120, I don't think a lot of these folks are going to cash, just like myself. If PayPal was $120 a share tomorrow, double what it is today, I sell 0 shares. 0 shares, right? And so overall, I think it's going to be a very fun next 24 months. We'll see. I could be wrong about it. A massive recession could screw up everything, but as long as we don't get a massive recession, I think I'm right on this one, and I think, it'll go to where it's going. One stock that is ridiculous right now, one of the most bullish stocks in the entire stock market is Palantir. Palantir up again today, another 2.75%. This is ultra bullish. I mean, when you get these moves after moves after moves, a lot of people start to consider, let me go ahead, let me take profits. It's had a heck of a move. Let me go ahead and cash out 25% of my shares, 50% of my shares, 75% of my shares, all my shares. There's a lot of people that do that, right? And they kind of look at it a little bit more like you would at the casino, right? Let me take some chips off the table. That's the way a lot of people would put it, right? And so when you have a parabolic move like Palantir, that's usually what you would have. But where are the sellers? Where are the big profit takers with this stock? Like, why is just the overwhelming buying pressure? You got to ask yourself, somebody knows something, right? Somebody knows something here. That those growth rates, when maybe it comes to U.S. commercial, is just the start of things. And we got a long way to go here because this is way too much buying pressure, day after day after day after day. It was starting to remind me a little bit of NVIDIA last year. It really is, right? This is a move since earnings. It's over a 50% move, folks. Over a 50% move since before earnings. That's shocking. Shocking move, okay? And just, every dip, every time this stock dips at all, every dip is bought right up. Every time you think, okay, looks like people are really there to take profits on Palantir now, it's bought right up, right up, right up. So pretty fascinating, pretty dang fascinating. Now, this is a 1-year chart of Palantir. The stock's up 229% in the past 1 year. And this latest move is straight parabolic. It's a straight parabolic move. This is the type of move you get in a stock when people say there's a fundamental change in the business model. That's when you get that sort of move. This move right here, fundamental change in the business model. What was this move here? This was a fundamental change in the income statement of Palantir, where they went from, this is a big money losing company, to, whoa, they're starting to make money. This is going to be a profitable company moving forward, right? And then this latest parabolic move here, which is very similar to this one is based upon, oh my gosh, the growth rates of this company are going to be insane over the next few years. Got to get on board, right? So it's a different reason for the parabolic move, but it's a parabolic move nonetheless. My gosh, this is since the end of December of 2022, which is 14 months ago or so. Stock is up 317% from that point in time. Shocking move, right? I try to see my best shares I have for a percent gain, and it's these ones here. These ones were acquired on November 22nd, 2022, 300 shares at $7.18. And those I'm sitting on a 248% gain right now. So a lot of fun if you're a Palantir shareholder out there. And to be quite frank, it looks like there's so much demand for the stock because people believe this is a fundamentally different company than it was not that long ago, like literally just a week ago. So fascinating, man. And I'd love to hear from any Palantir bulls. Are you taking any profits on this move? Or are you just like, nope, I'm riding this baby for a long time? Or are you in a situation where you're actually buying right now? Let me know in the comments section. I'm very interested from any Palantir bulls because there are people that are actually, they already have good positions built and they're like, I need more. $24 for Palantir is a joke because they believe Palantir is $50, $100 in the future, right? Now, next up here. So we spoke about Win, PayPal, Palantir. Let's talk SoFi. Let's talk Fubo. Okay, so SoFi is all over the flip and flapjack in place. This is a volatile mess of a stock, right? We know the business model is getting in a better and better place, but the stock price, it's not for the faint of heart in regards to SoFi. The moves are dramatic. It was $9 plus right after the earnings. Then a few days later, for basically no reason, it drops all the way down to $7.50 range. Now it's back to $8.33. And so my best advice when you hold a volatile stock is first understand it's a volatile stock. It's like step one, okay? When you look at it from that perspective, you understand it's going to be a lot of ups and a lot of downs, okay? Now, don't let this... The problem is a lot of people then get the thought process of, oh my gosh, the stock goes up a bunch, then back down. I'm going to trade this stock. Now, it sounds great in theory. Oh, you sell SoFi $7.16 after earnings, buy it back at $7.55. Oh my gosh, such easy money. It all sounds great in theory, but to actually pull it off, whole different ballgame. A whole different ballgame. And the problem is the more you go down that mentality, that mindset of thinking I can trade these stocks in and out, in and out, in and out, the more you're going to realize, oh my gosh, this is a lot harder. And as the months and years tick on, you're going to realize, oh man, I actually probably would have got a lot better returns had I just held through, bought dips, and if things got way overvalued, I took profits there. Okay, so don't let these sorts of things ruin you as your mentality of being a long-term investor and put you into a short-term short-term trader. Don't let it take you there. Because I can tell you, it's not a place you want to go. It is not a place you want to go. Always stick to an investor's mindset. Ask people that are in Palantir. Palantir was a super volatile mess of a stock for a couple years there, right? Tesla's been that many times. And ask any Palantir person that held that stock over the years, or Tesla investor, would you have been better off just holding the stock through, buying the dips, or trading in and out of the stock? Guarantee you every single person, far better off just holding the shares. Stock dips huge, you love the valuation, buy some more shares. Put it in the filing cabinet and let it do its thing, okay? So that's the bottom line in regards to that. Everybody that I know that made the most money on Tesla, everybody that I know that made the most money on Tesla, including myself, all were holders for the long term. And we're not worried about trading in, trading out. Oh, yeah, gotta get in, gotta get out. No. Don't let that screw you up. Because once you go down that path, it's hard to recover from that. It's very difficult to recover from that because it's a little addictive, just to be quite frank with you, right? So that's my 2 cents on that. Be an investor, not a trader. These things are addictive, okay? Next up here, we're talking Fubo, okay? So this is a perfect example. I think Fubo is a great example. So Fubo's climbed back 10% very quickly here at this point in time, right? This is a very good example of sell first, ask questions later, okay? The news came out that, Disney and Warner Brothers and the other company were all teaming up. They're going to form a sports service. It sounds like a freaking disaster, but that didn't matter. All that mattered was people freaked out the next day, and they sold every share of Fubo they possibly could, right? And there was just a massive flush. There was a massive pickup in volume, and there was no one really to step in on the buyer side because people were so scared, like, oh my gosh, what's going to happen here, right? Now all of a sudden, you look more into it. You're like, ooh, this sounds like, I don't know if the government's even going to allow this. And then if it does go to market, it might not be successful. And Fubo's had a million things that were supposed to kill them over time and never did. So the more you get into all that, the more you're like, oh, it's not as scary as I thought, right? And so all of a sudden, buying pressure starts coming in. And that's exactly what we're seeing with Fubo. Anybody that was really nervous about Fubo stock, they sold that next day after the news broke, right? Because that was all they need. If you're nervous about a stock, all you need is one good reason to sell, and you're out. No different than somebody that's looking to break up with somebody, right? All you need is like, give me one good reason I'm out of this relationship. That's the stock market. If you were on the fence about Fubo and you're like, oh, I don't really like this stock, I don't know why I'm in it. As soon as you heard the news come out about the potential competitor, boom, you're selling right away. It was all you needed. You're like, oh, finally, I have a reason. I can get out, right? So you get out, once again, you have a big shakeout. You have a lot of weak hands get out of the stock. And then all of a sudden, who's left to sell? You already got the sellers out at that point in time. So now, all of a sudden, buying pressure starts to come into the stock, right? And then we got earnings coming up in a few weeks. Imagine if Fubo cuts down on losses massively again, right? What's going to happen? What if Fubo announces another great subscriber number, another great revenue number? Next thing you know, the stock's going to be $3 and then going up from there, right? And then there was people selling for $1 something last week because they were panicked. And they didn't really want to hold it to begin with, so they were just looking for a reason to cash. So, once again, it gets into like, if you don't have conviction of stock, make your move out of the stock. Don't wait for a news-based thing to make your decision. If you're like, I don't really want to be in the stock, move on. If you didn't like a stock like a Fubo, move on. Don't wait for the news to come out, some scary news, because by the time the news comes out, now you're selling for a 20, 30% loss. Versus if you got out days before, weeks before, months before, when you didn't really like it, you were in a far better position, right? So don't be that guy, because there's a lot of people like that. And this is just a perfect example. And this happens with stocks all the time. Even bigger companies, the moves aren't as dramatic. It might be a 5%, 10% downward move. But I've seen that plenty of times. Oh, Amazon's getting into this business. And all of a sudden the other businesses that compete in that space are down 5, 10% the next day, right? Why are people selling then? Probably because they didn't have belief to begin with, and they were looking for a reason. And that was their reason. Oh, Amazon's going to eat our lunch. We're screwed. So that's a moral of that story, guys. Some good lessons for you there overall in regards to SoFi and Fubo, okay? Now, I don't know if you guys watch ever my reaction channel, Jeremy Lefebvre Makes Money, but views have started to go up dramatically on that channel. I react to a lot of different content and things going on in the market. We only have 39,000 subscribers on that channel, but we're starting to pull in like 20K, 30K views on that channel. So if you want to join me over there, join me after this video, okay? Much love as always. Appreciate y'all joining me. If you're looking to join my group of super investors, pin comment down there, fill out an application. We'll see if we can get you in there this week. Much love and have a great day.